So the market seems to be thinking there's a rate cut that's coming. What makes you think that's not the case?
I don't see anything in the economy that tells me we need to cut rates. I mean, I travel all over the world. The economies are strong. Europe is still having some issues with it, but overall, the U.S. economy is doing pretty darn well. And I just don't see any reason to cut rates right here.
Having listened to Fed members, I guess including Bullard, who has said he would have cut rates at this past meeting, what do you think they're looking at? What do you think they're seeing that gets to that sort of consensus, particularly with what we heard about where the dot plots went after their last meeting?
Yeah, well, you see some of the softening economic figures that have come out, the numbers this morning on durable goods, the housing slowdown despite the drop in mortgage rates. They're looking at that. But overall, what I'm seeing is the economy's doing pretty darn well. It's actually in a very sweet spot. We issued a trading flash on June 3rd with the S&P at 2729, saying a bottom had been formed and that we were going to trade to new highs, and S&P is going to be up about 200 points from that. And I think the stock market is telling you there's not going to be a recession, that the economy is going to reaccelerate in the back half of this year, and earnings are going to continue to come through better than people expect.
So you don't think any of what the market's done lately has been because of the anticipation of that rate cut? You think this is just purely trading on fundamentals here?
Well, I think the anticipation of rate cuts certainly spurred some further upside in the equity markets. But I really think it's more about a reacceleration in the economy in the back half of this year, and the fact that people are underinvested. I mean, you go out and talk to the individual investors out there, and Becky, they're not just cautious, they're scared to death. And that makes me think the equity markets are going to go higher here.
What happens if the rate cut doesn't come? You think that takes some of the wind out of the sails? What would you be telling people to do in this scenario?
Well, you might get a stall if the rate cuts don't appear. But again, I think the fundamentals are strong. I think the market is not expensive, despite what a lot of pundits are telling you. Our work suggests that the current interest rate environment, that the fair market multiple on the S&P 500 is 19 times forward earnings, which gives you basically a 3,200 objective on this year's numbers and a much higher objective next year if next year's estimate is correct.
Jeff, how do you try and figure out what the trade war could mean if things get worse, if the tariffs continue, or if the tariffs on the additional $300 billion in goods from China actually materialize?
Well, that's clearly a headwind. There's no doubt about that. But I think before the end of the year that the trade dispute will be resolved. China has a lot more to lose than the U.S. does. Just like we evidently have signed a trade agreement with Mexico and Canada, I think you'll get a trade agreement out of China.
And so you would be telling people to buy what? What particular areas? The S&P straight up, or you think there are certain sectors that do much better?
Well, technology is pulled back here after a pretty darn good run off the June 3rd low. So I continue to like tech. I actually like energy a lot. I like the master limited partnerships, the midstream MLPs that are as cheap as they've been in 20 years. They pay roughly 8%. And about 80% of that distribution is tax deferred, and they don't really have that much price sensitivity to the price of crude oil. They have the pipes and the storage facilities, and they have long-term contracts with people like Exxon and Chevron.
Anything you'd stay away from, Jeff?
I'm not real fond about utilities, and that's been a dead wrong call, by the way. And I'm not real fond of consumer staples, but pretty much all the other sectors I think are fairly attractive right here.
Why consumer staples?
I think they're expensive. A lot of the portfolio managers I talk to have not believed the rally, and yet they've had to put money to work because money's been coming in over the transom. And so they bought the defensive sectors, and I think it's made them pretty expensive.
Jeff, what do you say to all these clients you talk to who are so nervous and so scared?
Well, I say bull markets do not end with that kind of sentiment. Bull markets, if you remember, in '99, people were buying technology out the kazoo. And before this market's over, I think you're going to see that kind of enthusiasm again.